Welcome back, everyone. The next company to present on this track will be a real estate company, Randviken, and we are pleased to be joined by the CEO, Gustav Segerborg, who will spend some 20 minutes on a presentation followed by a Q&A session. So with that said, please, Gustav, the scene is all yours.
Thank you very much, and thanks for organizing this and for letting me present Randviken here today. I'm going to give you a short presentation on the company. I'm going to talk a little bit about our activities last year and our plans for the future. First, a couple of quick words on myself. My name is Gustav Segerborg. I joined the company back in 2017 as the first employee. Before that, I was based in London for a few years, where I worked for Norges Bank Investment Management. And prior to that, I worked as an investment advisor for a company called Tenants, which is now incorporated into JLL. I also have some experience working in a private real estate company called Lundbergs. Randviken is a fast-growing real estate company. We focus on fundamentally high-quality assets with strong cash flows. We have an opportunistic but sound and disciplined investment approach, and our main focus is on the office, industrial, and warehouse segments. Randviken was founded in 2017, and we went public through a reverse takeover in June last year, and since December last year we're listed on Nasdaq First North Premier. We have a diversified mix of properties, and the geographical presence is primarily focused on growing regional cities with properties that generate strong cash flows. We acquire properties with a conservative risk profile and a limited residual value risk. One of our strengths is that we are able to source and complete off-market deals. Almost all the deals we've done so far have been off-market. The property value as of Q4 is 6.4 billion. We have a total rental income of roughly 393 million and an NOI of 311 million. The average lease term is 6.3 years. We have a net initial yield of 4.8% and a net LTV of 56%. Q4 last year was a very active and transformational quarter for Randviken. We acquired 16 properties, and we more than doubled our portfolio in terms of value, and we added more than 3.3 billion kronor to the existing portfolio. To make this happen, we issued new shares to a value of roughly 900 million, and the annual earnings capacity as of today is more than 200 million kronor, or 4.7 kronor per share. This slide illustrates our rapid growth last second last half of last year. Looking to the left, we acquired a portfolio of 38 properties. The value of that was a little less than 3 billion kronor, and that was made in June last year. And this became the initial base of the company. Since then, we have acquired an additional 16 properties through a number of different transactions. And if we include deals that we expect to close later this month, our combined portfolio value is now in excess of 7 billion kronor. Our longer term goal is to reach 20 billion in property value. And once again, our focus is on properties with strong cash flows and a limited residual value risk. So, why is this rapid growth so important to us? For a listed real estate company, size does matter a lot. One of the most obvious reasons or benefits for having a bigger portfolio is that our central administration cost will go down in relation to rental income. We also believe that the property management will be more efficient as we add more properties to the existing regions, and also by that creating economies of scale. Another obvious fact is also that all else being equal, of course, that the total risk of the entire company goes down as tenant and property diversification increases. However, all this being said, the most important driver for our growth is to decrease our financing costs. A bigger company is much more attractive from a financing point of view, and that goes especially for the bond market if that ever opens up again. And as you can see on the lower right-hand side, we have a very strong shareholder base. I'm proud of these names, and they're all very strong owners that will support our growth story ahead. If we dig into the portfolio a little bit, you can see that our properties are located in growth areas from Stockholm in the north to Malmö in the south. We have divided our portfolio into 4 geographical areas, where what we call the middle region is the biggest one with 39% of the property value. The middle region is primarily Västerås, Karlstad, and Nyköping, all strong cities and regions that we believe strongly in. The second biggest market is the Stockholm region, with 28% of the total value, and that is as big as the West region, that also constitutes 28% of the total property value. In terms of property segments, logistics and light industrial buildings is our main focus, or actually the main category, with 46% of the value, and that is followed by office and public sector buildings, which make up for 19% each. The lower pie chart is quite interesting, actually. You can see that we have a very strong tenant base, with more than half our income coming from either big corporations with strong credit rating or from public sector tenants. This, combined with a long average lease duration of more than 6 years, is a strong proof of our ability to deliver strong and stable cash flows for the years to come. If we take a closer look at the actual tenants, all our top 10 tenants are either big corporations or public sector tenants like Tyresö Municipality or the Swedish Court of Law. These 10 tenants that you can see on the screen right now, they make up for some 40% of the total rental income, and the average lease term on these leases is above 7 years. And as you can see on the bottom right chart, the expiry profile of these, or actually on all our agreements, is quite evenly spread out over the coming 10 years or so, which is obviously good in terms of limiting the risk of income shortfalls. Here's a little selection of some of our properties, just to illustrate the range of different assets we invest in. You have everything from large industrial buildings in Västerås to healthcare properties in Stockholm and prime offices in cities like Karlstad. Randviken doesn't have any restriction on what type of properties we invest in, since we believe that good deals can be made in all sectors and in many different geographies. However, our primary focus is on warehouse, logistic, industrial, and office buildings, and these are also segments that we have a lot of previous experience working in. The business model is purposely made quite simple. On general, we try not to overcomplicate things at Randviken. We're now in the build-up phase, so there's a lot of focus on new acquisitions. We have a wide network within the Swedish real estate community, and as I said before, we try to focus on deals that are being made off-market. On top of the transactions business, we're obviously constantly trying to improve our existing portfolio by renegotiating leases, finding development opportunities on the existing properties, and so on. We also have a strong ambition to be one of the leading property companies when it comes to using modern technology in our property management. We are convinced that the use of new technology can help us cut operating costs, as well as potentially creating new revenue streams. We believe that if we can get access to granular energy consumption data from the properties, we will also be able to make better decisions on where it makes the most sense to improve energy efficiency. Currently, we are performing a wide-scale assessment of our complete portfolio in order to find out where the lowest hanging fruits are. We have also initiated collaborations with some of the most interesting PropTech companies to help us capitalize on these ambitions. Another initiative we have taken on the sustainability side is that we recently switched to only purchasing electricity from renewable resources, and we're also in the process of forming our long-term sustainability targets. This slide, coming back to a little bit to that what I talked about before, it illustrates our strong earnings capacity. As I said before, the portfolio in Q4 generates a total income of 393 million, and together with new acquisitions that we expect to do this month, the earnings capacity is in excess of 200 million kronor, and that is equal to roughly 4.7 kronor per share. Randviken has a very simple balance sheet. We only have one class of shares, and we only have debt finance on the liability side. In terms of financial targets or restrictions, if you like, we aim to have a net LTV of less than 65%, an ICR of more than 2 times, and an equity ratio of 35% or more. As we're focused on growth at the moment, we don't expect any dividend to be paid out the coming couple of years. Access to debt financing is obviously very important for a real estate company like us. As I said before, the balance sheet is quite simple to understand. We have loans with 2 major Swedish banks, and we're currently working on establishing relationships with a third one, or potentially a fourth one as well. The expiry profile of our existing loan portfolio is 2.7 years, and the weighted interest maturity is 1 year. And we have an overall average interest rate of 2.2%. Coming back to the shareholders list a little bit, as I said before, I'm very proud of having these strong owners with me. Our biggest owners are all entrepreneur-driven private companies or or listed companies for that matter, and also family offices. We also have some of the best mutual funds in Sweden in our shareholder list. And I think this is a very, very strong testimony for us, and it will be important for us to achieve our growth story ahead. To summarize a little bit, we have a well-proven acquisition strategy, and we have a great investment team in place. Our property portfolio consists of high-quality assets with solid cash flow from a diversified tenant base. We're constantly working with sustainability through decreasing energy consumption in our buildings. We have an opportunistic but also very disciplined investment approach, and the main focus is on regional growth cities. And lastly, both the management team and the board of directors are both experienced and also very, very dedicated. Thank you.
Thank you very much, Gustav.
Thank you.
So I will just start right away with your financial goals. So two of them are a property value of 20 billion, as you mentioned during the presentation, as of 2025. That's only some 3.5 years from now. And you also have a target to grow your NAV by 15% per annum.
Yeah.
On average. So maybe if you can help us sort of break down those targets and how will you achieve 20 billion and how do you sort of add up to those 15% per annum in NAV growth?
Sure. The 20 billion, we did 7 in 6 months. So if you extrapolate on that, no, I'm just kidding. I'm not worried about the growth target. Obviously, it depends a little bit on the financing situation and the situation going on in the rest of the world, obviously. But finding the deals, I'm not very concerned about at all. We have a really good network, as I said before. We source our deals from our owners, from the board, from our connections with brokers and also other property companies. So I'm not worried about that. In terms of the NAV growth per share, 15% is a good target for us. We had 12% before we changed that to 15 in December. And what we found was that 12% was a little too sort of easy, because if we buy properties at between 5 and 6% net initial yield, and then we gear it up 60% and some tax add back and stuff like that, you pretty much get 10 to 12% without doing anything. So 15 is for us to push us to do something a little bit better than just buy and hold. So by that I mean cutting costs, increasing rents, finding development opportunities on the properties and stuff like that. It's pretty basic. It's nothing too complicated, but it's just to raise the bar a little bit for ourselves.
It's nothing wrong with being simplistic, I guess.
No, I think it's easier to explain, and real estate, you could make it very complicated, but at the end of the day, it's bricks and mortar, and you have a tenant who pays rent, and you need to keep them happy and have good financing. So it's nothing too complicated.
Makes sense. So in terms of those projects that are adding the extra 3 percentage point or 4 percentage points, what is a fair assumption in terms of yield on cost or project margins, or how should we think about that?
Well, if we buy properties, we try to, if it's a stabilized property, we try to come in above 5% net initial, and for us to do improvements in the property, we expect a higher return on such capex projects. So I would probably assume something like 7, 8, 9% on the tenant fit outs and stuff like that we do. And that's what we have seen in the past as well. You tend to get around 8% on investments like that. So that's what gives you the extra percentage points on the NAV growth.
Makes sense. So you touched upon this during the presentation that you have a great investment team, you source deals off market, etc. And I mean it surely makes sense that a company looking at 50 million SEK acquisitions or below 100 at least probably can make better acquisitions than the ones looking at a billion or so.
Yeah.
How would you? What is sort of the yield spread if we compare a like-for-like property to a larger portfolio? How much better can you source?
I would say the yield spread on a large portfolio compared to the single asset for the properties we look at is probably around 100 basis points. So it really makes sense to be out there and try to buy and build. And that's also why we have established 2 joint ventures with people that are focused on finding these smaller deals, and they have a great incentive to do that. And those the deals they find we wouldn't have found ourselves. So it's a great way for us to get access to more deals, basically.
Yeah, makes sense. So we're running out of time, so I will finish up with one final question.
Okay.
So in broad terms, what do you believe sort of differentiates you from other real estate companies that do look at a lot of different geographies or a lot of different segments? If we say Balder or Nyfosa or the likes of these names, how do you differentiate from this?
I think it's if you have the kind of the same investment approach as other companies, hard to be very different for starters. What makes a difference is the ability to actually be quick, the ability to source deals and to complete deals. And as I said before, we have a great investment team. We specialize in making these complex transactions, be it single assets or portfolios. So I think what makes us different is our ability to actually make things happen and to be quick. It pays off most of the times.
All right, thank you very much, and thank you all for listening in. So I believe there will be a short pause before the next company is up to present. Thank you.
Thanks.